Happy New Year and welcome to Decision Point with Aaron Swenlin and Carl Swenlin. Hope everybody had a great holiday. We are back in business here and ready to start another Decision Point show. Carl is here with me, my dad. How's everything going for you?
It's been a pretty good New Year so far.
Yeah, I have to say it was a good holiday for us. We were able to spend it all together, which was, of course, special. So let's go ahead. We have a packed agenda today. We will be starting well, these are all in different orders here. We did launch our DecisionPoint.com website. I don't know if you read Carl's weekly wrap last Friday, but we have expanded our presentation of the Decision Point Alert and Decision Point Diamonds, and we've moved them to our website. And I'll be talking to you more about that as we get into the show. Of course, I'm going to show you our sector scoreboards and our broad market scoreboards. We're going to start with talking about some of the news and what we're thinking about as far as the market's movement. And then we'll look at some monthly charts since they did just go final. And as a bonus, of course, we have Carl's grab bag. So I know you have lots you want to share. But let's go ahead and open with what's been going on in the news and what you're thinking about Iran and the various other items going on.
Okay, let me share my screen.
Yes.
I'm reminded of James Dine's, one of his famous quotes is, "A trend is a trend until it ends." And we still have an uptrend. In spite of all the turbulence we got this weekend. And if there was ever going to be a sell-off on news, it sure missed the chance today.
Mm-hmm.
But on Thursday, this was before the news of the airstrike in Iraq. I was pointing out that we had an up day on, that was the last day of the year, and it was somewhat climactic in the way of new highs, but there just wasn't enough volume, on a holiday type market day, and I still declared it as a exhaustion climax, which I think it's kind of turned out to be with the help of the news at least. But so maybe there's some more downside to go on that. Another thing that I thought was worth covering was gold.
Parabolic chart.
Again, on news, we have got a parabolic arc up here, but you notice it got above this resistance, but it closed right on it. And let me just change to candlesticks on that. Yeah. So
There we are.
we have there is a
shooting star.
Shooting star. So a lot of enthusiasm today. I think, still gold. I really wish I had some more of it now, but I think they might get another chance. The big problem with gold is the huge short position that the commercials have.
That makes sense.
Right. And the other one I want to look at was oil. And this is not really doing all that much considering the Middle Eastern issues. So
that's true.
Yeah.
There could have very easily been a pretty deep decline, but I guess that does show how the energy independence that we've started to get between us.
Well, still, even though we're energy independent, if the world seems to think the Middle East supply is seriously threatened, um, it's going to cause prices to go up, in spite of the fact that it's we're energy independent.
Mm-hmm.
At least we're not being held over a barrel like we were back in the 70s.
Exactly.
And if I may digress a little bit here.
Of course.
Back in the year 2000, I was Timer of the Year for Gold, Timer Digest. Be that as it may, one of the things that I remember that year was one of these watershed events that gold. Let's just pull up the monthly chart right down here. Gold was flat for a long time. Nobody. When I got the Timer of the Year, I told Nick Profit, and he says, "Congratulations, Carr. Nobody gives a care." I mean, he didn't say it that well, nicely. So the thing is, it's true. But the watershed event was one of the things was Homestake Mines sold. No, I'm sorry, they closed their namesake mine, the Homestake Mine, and to me that was a watershed event.
Mm-hmm.
So now we have crude having a problem, or actually having some life shown into it. And I was thinking the other day, talking about watershed events, was, Aramco, the Saudi oil company, went public, which is, kind of like selling at the bottom, and so, in many ways, it's probably going to mean, excuse me, it's going to mean that we're going to see some upside in the oil patch soon.
So you're expecting a breakout to challenge those 2018 highs? Is that what you're looking at?
Well, when I was looking at it, Larry Williams mentioned this in one of his presentations on StockCharts. And let me get the proper chart up here. I do that all the time. Okay. This is the oil service index. And you notice we've gotten really down on the long-term low here. This is about 25% below where we are here. So if it's going to have to go down and test that, we have to go that route. But the point being is, with this being flat, it's time for things to turn around, considering the turbulence in the Middle East and the threat to the world supply of that.
All right.
So I think, why don't I pass it back to you?
Okay.
I'm having trouble with my notes here.
Okay. I will go ahead and take it and talk about what we did this weekend.
Oh, yeah.
And actually, it was last Thursday, but we did open up DecisionPoint.com. We still will be providing free content, StockCharts, as we did previously. Probably not quite as robust, because we are spending most of our time putting up very interesting articles. I'll be writing that DP alert. If you recall, for free, in our free blog on StockCharts, I would write a weekly midweek DP alert, and Carl would do his weekly wrap. But now on our website, we've decided to bring back daily commentary on DecisionPoint alerts. So I'll be writing every Monday through Thursday a DecisionPoint alert that's going to go over, as we always have, what's going on in the major markets and looking at the big four, like we just talked about a little bit earlier: dollar, gold, oil, and bonds. So rather than just twice a week, now you can get your DecisionPoint fill for 5 days a week on our new website. And then also those DecisionPoint Diamond reports that I was doing on the StockCharts blog, that is going to move over to our website. It will be a paid product. But again, like I said, we will still be publishing, I'll still publish some charts for you to look at that are, either diamonds that I've looked at or requests. I'll put those in the free area. But now you'll see 3 to 4 diamonds reports a week and get those 5 picks that I get from our exclusive DecisionPoint scans. So the other great thing about our new website is we have these curated chart lists, and you could get to these chart lists and you can still have them on StockCharts.com if you're a major member. But if you're not, if you don't use StockCharts probably to its fullest abilities, you may, and you're a big DecisionPoint fan, there's no reason why you couldn't just have our website, because we do have these chart lists. And I will look at one, and then I'm going to, of course, show you our little sales page, and I will let it go back to some analysis. I will do a little analysis here for you right now. So this is the sector chart list from our website, and what you can see, we basically will publish these at the end of the day with our annotations on them. And in some cases, of course, we'll talk about some of these charts in our DecisionPoint alert writings, possibly in the diamond writings, depending on what I see. So it's really kind of a one-stop shop if you're a DecisionPoint, if you're part of our DecisionPoint faithful. I have to say thank you to a lot of our original subscribers back before we were involved with StockCharts. I've seen a couple of your names already pop up on our new subscriber list, so I do appreciate your continued support of what we do. So the business model at StockCharts changed. We have to make a living. So we've gone off and started this website. I think it's really an advantage for our DecisionPoint faithful, which is probably just about everybody watching this show. So I think for those of you who are, really into what we do, I think our website will be a great place for you to go. But here's a sample. This is the sector chart list that we curate, like I said, and publish at the end of the day. And, what I've been watching, I actually talked about it over the weekend for Market Vision 2020 about my favorite sector. And I think I did write about this in Chart Watchers, not this last weekend, but the weekend before. I was asked before I went to Market Vision, what is your favorite sector going into 2020? And, of course, many, many people were looking at XLK. And I will bring that chart up for you really quickly here. There's your industrials. But notice we have all of these indicators on each of the sectors. Our golden and silver cross, those new indexes that we've come up with, that Carl came up with. And where is it? There is XLK. So when I was reviewing, which sector I really like the best, of course, XLK technology is really the first one that comes to mind for most of the analysts, because, you can go over here to StockCharts. And if I go to the sector summary here, I'm going to show you what I'm talking about for last year. So last year, 1 year, let's see here. If you look at the sectors and you sort them by the winners and losers, technology was up over 31%. And, interestingly, industrials was not far behind. Discretionary didn't perform as well as I would have thought. And the fact that we are seeing such outperformance in the technology sector, what the problem is now it's quite overbought. And I looked at the Apple chart. I know we've talked about the Apple chart here on the DecisionPoint show, and you can certainly see the parabolic. Whoops. Oh gosh, I'm losing my mind.
APL.
Yeah, gosh. Trust me, people, I do know that. I call it menopausal fog. So anyway, when I looked at the Apple chart, and we've talked about it, you have quite the parabolic move. It's extraordinarily overbought. Volume has been behind this move to some degree, but and it's very strong right now. But when I go into 2020, I would be looking more at XLY. And the reason being is that it isn't quite as overbought. And I think that there's still a lot of possibilities in that sector. I'm going into 2020 bullish, which I think probably shocked some of the people at. I know Tom Bowley was shocked when I told him that I was quite bullish coming into 2020. Not that it's going to be perfect, but I think we will close much higher by the end of the year. But anyway, looking at the XLY chart, you can see that we're not nearly as overbought. We haven't had that much, spectacular movement. It's been mostly in a sideways range, but we're finally getting that breakout. Obviously things are shaking out right now with what's going on in the markets currently, but I think you could even make a case for a bull flag here. The PMO is not overbought at this point. We've got, when I start looking at some of the numbers here, yes, we've started to lose out on percent of stocks above their 20-day EMA, but we're getting ready we're consolidating. We may have to pull back a little bit, but once things get going, I feel like this sector is one of the few that's really poised to do quite well going into 2020. So that's kind of
Aaron,
what I want to talk about.
Not to interrupt your rhythm.
Nope, I was just closing it out.
No, I wanted to point out, though, that stocks above their 20 EMA, that is falling off, even though price is moving sideways, essentially.
Mm-hmm.
And going up to the communications.
That's my other one that I like, too.
Right, and now look at the 20 EMA stocks on that.
Yeah, that's
that
really
means that, you've got a lot of stocks that are dropping below their prices are dropping below their 20 EMA. Short term, that's not a really good thing. Now, notice that hasn't updated for today.
Right.
Yeah.
It's
no the
oh right,
the
because
indicators
don't have the
they're late. There's nothing we can do about it the way the thing updates. But so it'll be interesting to see with that price breakout today how that'll affect these other. But that's one of the reasons that's on there, to see to look for movement that is counter productive, that is diverging negatively.
Mm-hmm. Absolutely. Yeah, seeing that breakout on XLC and then seeing the decline going on. Well, just like you said, we don't know what's going on here with these two, but just looking at the scooter, it's still pretty strong, but we're getting that overbought area anyway. I think what people have to remember is that these spiders are cap weighted, and so when you have an XLK or even XLC, some of those larger cap stocks that make up the higher percentage can make these sectors look like they're doing great, because if you have the top 3 or 4 holdings doing well, then and everybody else is starting to fail, if you're going to get these price moves to the upside, but then you're going to have the failing going on in the breadth. So it's just something to always consider as well, what those top holdings are. But anyway, I wanted to show you just one of our paid chart lists that you can get to. This is why, for some people, not the heavy users of StockCharts, maybe you only have one chart list, maybe all you look at are DecisionPoint charts. You could certainly just move here. And, I'm not encouraging people to do that necessarily. I'm just giving you information depending on where you are and your investing and use of charts. So if you want to subscribe, of course, we have our little subscribe button where we have charter member pricing going on. We're selling the DecisionPoint alert right now at $25 a month, but you can save even more, of course, if you want to buy a year subscription. These prices will be going up eventually. But right now, as our opening special and for our charter members, we wanted to give them a bonus. And then, of course, the best way is, of course, to get both DecisionPoint Alert and our Diamonds reports, which are $40 a month right now, or $400 for the year. So again, I wish we could continue to do everything for free, but it's just not possible at this point. So hopefully you'll come check us out. And even if you decide not to subscribe, be a paying subscriber, we do have a free newsletter that I'm going to send out, probably once a week, maybe every other week. I don't want to bombard everybody with free, with emails. But I will let you know when we have those signal changes. And whenever I post a free blog, or whenever, for example, we do a new DecisionPoint show like today. So go ahead and sign up for that at the very least. And you'll get a little bit more information along the way as to what we're doing, and make your decision later. So anyway, I'm going to pass it back to you for your grab bag. And then I don't know if you wanted to look at any more monthly charts.
We might get back to that. Let me see how long this we can go for. One of the things I watched part of Larry Williams' show, and he was talking about NLI. It's an RIET.
Oh, REIT, yeah.
REIT, and let me just go to the. Is paying 11% dividend.
Wow.
Yeah, but it is, the question in my mind was, how vulnerable is your your basic investment on this thing? Mm-hmm. And he showed that something I'd never thought of, and that was how to get the unadjusted price on ETF. Mm-hmm. And not so obvious here. Let's actually go out to the monthly and see the history of it. This is as if you didn't get any dividends, whereas the normal chart's adjusted to include the gain of this, like it shows all the gains, not only the advances of the basic instrument, but including the dividends. But you notice this is quite a drop down to here. That's like a 60% drop, and I have been getting interested in REITs because of the dividend, but it's no free lunch. What my conclusion is that, yeah, they're great as long as real estate is not suffering, but you're going to lose a lot of principal in the process unless you can just let it sit there forever. But you never know. We just got out of the last real estate depression, 10 years ago, and very apt that it could happen again. So it's not a risk-free investment.
I wish maybe you can find some of those and let me know which ones they are. The risk-free.
Yeah. When I find them,
we'll be sure and let everybody know.
I've got a list that I call the FANG Plus, which we'll go to here. What I wanted to talk about was we talked about a couple of shows ago about Michael Burry, who was able to short the mortgage instruments back in the financial crisis and made a killing. And he was one of the few people that recognized what was happening and how dangerous it was. So now I'm looking at, he's talking about the index bubble, which is where what I talked about before is it's the problem is from his point of view that it's the lesser quality stocks in an index are getting bought. Anybody wants to buy SPY, every S&P 500 stock gets purchased, and regardless, so that the least appealing stocks are still getting support. Then I've been thinking about it for a couple of weeks, and the thing is, when anybody buys SPY, all those stocks are being bought without any regard to whether they're overbought, whether they're getting out of control, like Apple here. And I showed on Apple how what this is a 40% decline right here. That's a lot, and that's because of I believe because of the indexing. And now you've got it going up, in a ridiculous angle again. Let's look at a few more of these stocks in my bang list. Here's Amazon. I should have set this on weekly, I guess. But again, here's Amazon. It was done almost 40% in that pullback there. Facebook, I'm not so sure. Yeah. Okay. Again, another 45%. I mean, come on, folks. I mean, so this is what it is. This is that index bubble that's going to get us all into trouble. Here's Google.
Nice breakout today, huh?
They're still pretty strong. That was a 25% decline. So it's something to consider. This is basically showing how quickly people could get out of love with the stock market and any particular stock, but mostly it's the stock market because the indexing is just let's just say it's created a different kind of market, and indexing is never going to go away. So it's one of those things we have to
just keep in the back of our mind,
Exactly.
Really. Yeah, and I know with DecisionPoint and the way we write and everything is we're both really cautious investors. We really do we don't blow things up as being great if we don't think they're great. A lot of times people might consider us just a little too cautious, but it's not done me wrong.
Right.
I've left money on the table, let's put it that way, but I've also kept a lot of money in my pocket. So by not risking it to that, the degree that we do. So, I mean, I think as far as our investment philosophy goes and our analysis goes, we do tend to be more, what's the right word? I mean, cautious is a good word, but we really think about it a lot before we write what we're thinking about. We don't want to give you, just throw something on the page. If I put a diamond out there in my diamonds report, I want everybody to know, hey, I like this because of this. This is something that came to my attention. I think you should take a look at it. We're very careful in our analysis, I'd say.
Absolutely.
So anyway, got to close it off. It's been an excellent and happy New Year show, the first of the year. Hope you will join us every Monday at, let's see, what is it? 5 o'clock, 5 p.m. Happy trading.
Yeah.